Welcome, everyone, to Trading a Smaller Account. I'm Connie Hill, sitting in for Barb Armstrong today, as she is back at our event in Chicago, and happy to fill in. This is a fun class to be able to teach. I know a lot of you look forward to it. How many of you are actively using the sector rotation model or identifying what sectors are strong and which ones are weak? How many of you are really being active about using that in choosing the stocks that you trade? Sometimes it can make your job a lot easier. And so we'll talk about how you might be able to facilitate that and some things you might be able to bring into your trading. Happy to see so many familiar faces here today, or I should say names. I don't know your faces actually. But lots of the usual suspects here today. Sharon, Alfred, Will, TM, Jay Richardson, Bogus, Sharon, Jody, and the like. Lots of you here. We are joined in the chat today by Mr. Scott Thompson. You guys know Scott. And he's here to help me field your questions. There might be some things I can't quite get to, but I'll keep my eye in the chat. He will as well. So when you have those questions, go ahead, send them in. It looks like Chicago is home sweet home to Sam. Interesting. All right. Now, I'm on X, and I hope you're following me. I'm Connie Hill CS. Scott does some great posting there as well. He is Scott Thompson CS. It's free and easy to follow along. Got some little trade nuggets going, not trade nuggets, ideas of things that are going on in the market that might help you with your trading. Let's go through our disclosures. I've got a pretty big agenda for us today. Hopefully we'll be able to get through all of it. Options carry a high level of risk and are not suitable for all investors. What we talk about today is for information and educational purposes. Don't consider it a recommendation. We will be using the Paper Money software application. It's what you download to your computer. I've had people say, oh, mine doesn't quite look like that, and it might not if you're using the web version. And so we'll encourage you to download that software so it is the exact same software that we're using here. It's a great educational tool. Investing involves risk, including the loss of principal. Past performance is no guarantee of future results. Now we're going to take a quick look at the market, see what's going on here so far today. I have some concepts I want to share with you about tracking what sectors are in favor and which ones aren't, and apply that to some new trades that we're going to do here today. So let's hop on over. And first thing I'm going to bring up for you is a grid. And this grid shows, I told you we'd do the markets first. I should keep my word. Let's go to the markets first. All right, let's go to SPX. What's going on there? You can see it's kind of just been a little sideways for a little bit here, not making a lot of progress up or a lot of progress down. The NASDAQ, I'm going to say, is even a little bit weaker than the SPX. One tool we're going to use here today is called the relative strength line, and it compares whatever this ticker symbol is, in this case, NDX. It compares it to the SPX. So if the line is going up like it was through this period of time, it's stronger than the SPX. When it's pulling back like it is right now, kind of we're seeing lower lows and lower highs on that line. That means whatever's in your ticker up there, NASDAQ in this case, is weaker than the SPX. And this can be one of the tools that we'll use here today as we're looking at some different stocks. Now, the Russell 2000, let's see how those small cap stocks are doing. Looks like they've pulled back to about their 30-period moving average. I should tell you, blue is 10, purple is 30, and this red line is, although it kind of looks brown, that reddish line is a 50-day moving average. So you can get an idea, well, how far have things pulled back? So really the Russell just kind of hanging around that 30-day moving average. And for a long period of time, you can see here all through May and June, it was actually trending stronger than the SPX. Now, not so much right now. Maybe it's going to be able to stabilize here. We shall see. And then the Dow Jones Industrial Average. Oops, I did the wrong ticker. Let's do DJI here. Notice on it came down and touched the 30 today, but it's heading back up. fact, it's trying to get above the 10-period moving average. So I'd say maybe the Dow Jones might be the strongest trending of the indexes that we're looking at here today. All right. Rob wants to know if we can look at the trades Barb put on Monday. Now, I am in Barb's account, okay, because I wanted to use it. However, I don't know when she put on what trades. So, Rob, if you want to help me there and tell me maybe which particular trade you're interested in, you bet. I'm happy to look that up. As I was looking at the positions that she has, there's quite a number of different things. And I actually don't have the background to know what was the thinking with this trade and what were the rules going to be used with particular trade. But I'm happy to take a look at those that you might want to look at. Okay, so you go ahead, you let me know. All right, now we're going to go back to my first tool I wanted to share with you. And this is a grid of all the different sectors. And in the bottom right-hand corner is the grid of the S&P overall. Okay, down here, which is mostly going bullish. Kind of been a little bit sideways, but let's focus on the sectors, see where there is strength right now. Where are we seeing in SMUP trends? Now, this is just a 30-day chart, so each candle represents 1 day. And so these are very short-term trends, but we could see energy looks like it's headed up. Materials, a little bit more on the downside. Industrials, more on the downside. Consumer discretionary. Now, I have noticed here the low points are gradually getting a little bit higher. Okay, so maybe a little bit into consumer discretionary, a little bit bullish there. Consumer staples, if we look at this, I drew that a little too high, but it's been mostly going sideways. We'll see if this materializes into anything here where it starts to have a little bit more strength. Notice healthcare has been going up pretty decent. Financials, information technology, there are going to be different pockets that are doing well and some that aren't doing well. And it seems like they're ping-ponging back and forth, right? Software weak or strong, or semiconductors weak or strong. They kind of keep trading back and forth with each other. But I wouldn't say information technology is the strongest sector right now. I'd say maybe it is starting to be a little bit weak. Okay. Utilities, I'd say they're just kind of flat, and maybe ever so slightly is real estate starting to go up. Okay, so we definitely have some weak ones, some strong ones. Yes, Cahill, because I call Cahill my cousin just because we share the same last name. Cahill wants to know if we can share these charts. Absolutely, I can. Now the blue lines aren't going to come across with it. Those are just my drawing tools, which I will get rid of here. And let me see here. This is called Sector Matrix Dark. Okay, so it's a grid chart, and I can share this grid with you. And message went over to my other screen here, but I'm going to put this in the chat for those of you that are here live, if you're interested in picking this up. What you would do with the formula, for those of you that might not be as familiar with this, come over to setup, say open shared item. I'm going to just paste that formula in there. If you're looking at this in the recording, for you, I'm going to do something real quick. That is, I'm going to put it in a text box. Oh, let's make that text box a little bit bigger here. Let's make it like a 30-point font here. All right, so those of you that are listening to this on the recording, just hit pause, go ahead and capture that script. Now remember, anytime we share a script with you, it's never guaranteed as to accuracy or timing, okay? But you go ahead, if you add that item, it'll probably look a little bit like this when it comes in, and then you just maximize it. And then if you want to keep it, great, you can keep it. It'll show up here in this separate window, but then if you come over here to your grid charts, guess I would need to save that. I didn't save it, but you would want to save it so you have it. And if you don't like Sector Matrix Dark, call it something else. Okay, so going back to those little charts here, though, which ones are the strongest? We maybe go a little bit like this and go over here to my scratch pad. I'm going to say the ones that were stronger were energy, healthcare. What else was strong? Energy, healthcare, maybe real estate, although there aren't a ton of real estate stocks. I'll just give that an RE. And it seemed like consumer discretionary were the stronger sectors. So we might be more inclined to be looking in those particular sectors for stocks that meet our conditions, the things that we're looking for, knowing, hey, they also have the trend of the sector going that way as well. Okay. Yeah. Muriel Corey says DRAM reversal. There are some stocks that have been reversing. That's true. Now, as I look in the chat, it looks like we have a survey opportunity for you. Those of you that join us all the time know from time to time, we'll put a survey out there. I don't control it. Scott doesn't control it. There are other powers, big powers that control it. Anyway, we would like your feedback. Survey is super easy. I can deal with super easy surveys. 2 questions. You just fill in the radio button, plop, plop. On a scale of 1 to 10, what are your feelings regarding those 2 questions? There's another couple of questions you can answer if you want. I'll be sure to share the information with Barb. And I always encourage you to use it as a place to, if there's something you want to communicate to us. In this case, it'll be probably more useful to Barb. But if you're struggling with something you'd like incorporated into a session, let us know. We love to answer your questions in our upcoming classes. Okay, which ones were the weaker sectors? Okay, do you recall? I recall industrials, materials, financials. Let's go back to financials real quick, because I was thinking they were starting to show a little bit of strength, and so we probably should put them up here in the stronger. Okay, I'll just put FIN, fins, we'll just call it fins. Okay, then back to our weaker ones. So materials was weaker, industrials was weaker. Number 30, this is consumer staples is more flat. So I'd just say, yeah, real estate, consumer discretionary. Consumer communication services was looking like it was starting to become a little bit stronger here. Yeah, it's got a little pullback today, but I would say communication services as well is upward trending. Okay, so I'm just going to say CS. And on here, I'm going to put information technology in some of the weaker ones, even though just recognize there will be some different pockets that are having a hard time and other pockets that are doing well. Yeah. Sam says Staples had a little bit of a appeal. Chris thinks healthcare is strong right now. Yeah, very good. So we've got a little bit of a summary here that is going to help us. All right, next up, I'm going to open up a watch list, and this is a watch list I use in some of my other classes, and it's called Liquid Options. It's a scan we did together in my long verticals and diagonals class on June 11th. Okay, and in that webcast, I showed you the process for creating a watch list you could use for almost any strategy. Okay, we're going to use a lot of stocks. Our example stocks today are going to come from this list. If you want to see that, I actually was smart enough, I shouldn't say that, alert enough to copy the link of that class. Okay, so this class is where we did the watch list. Okay, so I'm just going to type a watch list there if you're interested in finding that. Now, the one thing I did here today is that we have that watch list, but I also put in the sector. All right, so if we come up here to the gear, hit customize, there's some a couple of scripts Barb has out here, like a 1 month and 3 month script. And I put in here the sector. Okay, so you bring that up, just type in SECT, boom, there's your sector. And go ahead and put that in. And then you can be kind of looking at that. Oh, gee, energy stocks were doing well. As far as the sector goes, what are the energy stocks here doing? We might go out here. Yeah, use that little bit longer chart there. That one looks a little flat. That one looks a little bearish. And I'm just going to kind of reset that there. Valero, okay, Valero looks a little bullish. Okay, so those particular stocks, you just kind of have that idea in mind. If you see materials and industrials, you might be thinking, oh, these are some that might be going weak right now. And the thing about this watch list is it can be used for both bullish and bearish examples. Okay, it doesn't have to be just one entire bullish list because it's not. Okay, there are going to be some of each. Now, the one thing that I like to do on a given day when I'm looking at this watch list is I like to sort it by the percent change today. Okay, so that's one of the things I added is just this percent change. And we'll start with the bearish ones on top. And we can see, I'm going to say maybe half and half. Half are bullish, or I should say half are up today and half are down. Now let's take a look at one of our first ones that I want to examine here. And we're not going to do it. Okay, I was looking at Hood here, and financials actually have been a little bit stronger as a sector. Hood initially had dropped below the 30-day moving average. Earlier today, it was down here, but right now it's starting to exhibit some strength. In fact, if it were the close of the day, we would say, man, that's almost a hammer candle, which a hammer candle has a long shadow here, usually a tiny head, so that's why it's kind of hammer-ish. But typically that means potential reversal. So do you know what? We're not going to go into that one. Let's go to our next one. J&J. What's going on with Johnson & Johnson? They're in the healthcare sector. We remember, okay, healthcare was a sector doing a little bit better. And then the one thing I've got on the chart is this relative strength compared to the SPX. So we want to know, hey, is this stock trending more bullishly than the SPX, or is it trending weaker compared to the SPX? And so one thing we can do is we can just kind of look and see, hey, are the low points getting a little bit higher? If they are, good. If our high points are getting higher. Yeah, so this is giving us an idea. Okay, the SPX right now, since say June 22nd or so when it was at the bottom, or even we could even say back here the first part of June, it has been trending a little bit stronger than the overall SPX, which is what we use as our gauge for an overall market. That can be an additional element that you put into your decision making when you're trying to put as many things in your favor as you can. Okay, one of those, hey, is it doing better than the SPX? Great, might look at that for a bullish opportunity. Do you know what I forgot to do? I forgot to do the rules of our class. Sorry, I'm going to go back here to the slides because we need to review what the rules are, especially if somebody's just joining us new. They might not have all these rules memorized. Okay, so it's a $25,000 account. It's an account that we're trying to build up. Maximum position size is $5,000, and the max risk that we take in any trade is $500. That's how we're going to position size. We look for short to intermediate time frames, and we'll trade both bullish and bearish directions. Some of the bull strategies that we will look through are those listed. And then on the bearish strategies, usually just long puts, long put verticals, short call verticals. And sometimes, depending on what the market is doing, if they were in a little bit more neutral or neutral stock that we're looking at, sometimes we might do an iron condor or a calendar. Okay, so sorry I skipped over the rules of our class. Cahill says, we don't need no stinking rules. Actually, we do. We need some stinking rules, although these rules don't stink. These are good rules. All right, so J&J, looking a little bit more bullish here. Earlier, it traded higher than the high of the low day. Actually, if we zoom in, ooh, yeah, that's just barely a little lower. Earlier, it was looking like a trade above the high of the low day. We obviously are not to the closing of the day here, so we don't know if it's going to actually close there. But right now, it's looking like a nice, decent bounce. So we're going to use it as an entry signal. On Johnson & Johnson, we are going to use these August 21 options. Just so you can see, they do have some weeklies that are available. However, the August options are just kind of right in a sweet spot. We're going to be mainly doing verticals today. And typically with a vertical, we want to work with 20 to 40 days worth of time. That's kind of an ideal window. Sometimes we might actually go a little shorter than that. Sometimes we might need to go a little bit longer just to have the liquidity and the options. But the August 21s are just right in that sweet spot. So we're going to use them today. We're not going to worry about picking through the weeklies, although if you wanted to, you could. This one, we are going to do a long haul vertical, okay? Many times we'll start with our at the money strike price to determine which our leg is kind of going to be our driver leg or our bigger leg in the trade, which one. So this is going to be our long leg, 250, and then we'll sell the 260. So we're just going to say buy vertical. And with stocks that have a $10 wide distance between the two strike prices, many times we'll only be able to do one trade in this class because we don't want to risk more than $500. So in this particular case, would be risking 485 to make what? To make 515. So we're risking a little bit less than what we have to gain in the trade, okay? One thing that's kind of an easy thing to do is just put in an exit point when it hits a target of profit that you're comfortable with, that you're happy with. Let's do a first trigger sequential here. Let's create an opposite order. And in my classes, sometimes I'll say now, what percent of the max gain are you comfortable saying, if I can get that, boom, lock it in and move on? Sometimes that answer, go ahead and shout it into me. Sometimes that answer will be 50%. Some of you are like a 60 to 80%, somewhere in there. Everybody's going to have kind of a different level where they are like happy campers if we can get that amount. So I'm going to see what some of you are saying here today. I have a particular number that I use a lot, but it can vary. I like to bring in your ideas as well. Let's see. Question about which account we're in. Is a $700,000 SIM account considered a smaller account? I would not say so. Let's see, where is that $25,000 account? Oh my goodness, let's see here. I think it's this one. We can see the net look right now is at 30,000, knowing that the account started at 25. All right, 50, 50, 50. Lately, Chris says. Sure, let's not that this spread is too wide. Let's see here. I'm going to say no. There's a 30-cent spread here. This one looks a little bit like it might be a little bit wide on that 250 strike price. What you can do, and I'll just do this. I'll do it with the bigger one. Okay, we'll take 1015 minus 940 to get the difference in the strike price. So the spread on that one is about 75 cents. If we divide 75 cents by the asking price here, 9.95, that's going to give us a percent. And so the spread on this is about 7%. Now it is a little bit wider than some. It's not, and it is wider than the next strike down. That one's going to be a little bit more reasonable. That'll probably be in like the 5 or 4% range. So it's kind of in the middle of, you wouldn't want all your spreads to be on 7%. You'd want them to be less than that. However, some people will draw the line at 10%. If they're like, if it's a 10%, man, I'm not going to go near it. Okay, so that is going to be a comfort thing for you. Cahill says, I was thinking about 40%. It doesn't move that fast, and I don't want to be in too long. I like your thoughts there, Cahill, cousin. Just the idea that, maybe it doesn't have to be the same number for each trade, but depending on the circumstances. Noting here that J&J, might not be a huge mover. That the stock's at 253 right now. Maybe it could have a nice bounce up to previous resistance around 269. So that's a decent amount. That's about 14 bucks in this case. So that's not too bad. All right. Let's see. Somebody says 30%, but you're relatively new. That's okay. You can be new and have whatever number you like. Okay. I'm going to go with those that chimed in earliest, where we had a 50-50-50 because that was the highest response. So what we're going to say here is if we get 50% of our 515, we'll be happy. So let's bring out our 515 times 0.5 for 50%. That's going to say, all right, when we've been able to capture 257 of it, we want out. Let's add that to 485. That gives us a value of 742. Type in 7. I'm going to round down on this one. I'm going to go just 740 here. We'll make it good till canceled. So we're basically looking for about a 50% gain on this one. If it comes this week, great. We're happy campers. All right, we'll see if that frog will go away and send that off. Let's see. Sam is saying on the long call verticals, you're in for the count. Count on it. Sometimes it might take that 35 days to make that move, although typically we probably wouldn't stay in a trade that long. On J&J, they just had their earnings, so we don't have to worry about that factor. But, when you get to about 10 days out on a long option, typically you want to be out of there or be finding an exit. Okay, so we wouldn't plan to be in that long, and a lot of trades, if they move real quickly for us, sometimes we're out really quickly. Other times, I know we do a lot of long verticals in my long verticals and diagonals class. Many times we'll be in there for a couple of weeks before it finally hits the target. All right, next up, let's take a look at this chart. Everyone's favorite shopping channel. I shouldn't say that. I can't speak for everyone. A familiar shopping resource, which we're very fond of at my house, is Amazon. What's been going on with Amazon here? Had been quite strong, pulled back here recently, but right now it looks like it is maybe reversing trend here. I drew a nice little channel that it looks like it started to build. I was going to say the icon for channel I don't have in my toolbar because I just created that real quick. But basically, if you're not familiar with drawing those, start down here and you kind of are going to draw your diagonal support line. And you want to make sure you're hitting at least 2 days and then click it so it anchors it in place, and then it gives you this other little leg. And do the same thing there. We're trying to capture the high points here to see, how high is that ridge? And so then that makes our channel. Right now, what is the stock doing? Oh, it's bouncing off the bottom channel here. So that could be an entry signal that some traders might like to use. Now, Amazon is ever so slightly, right? This is a nice gradual incline on the relative strength line compared to the SPX. So it is trending a little bit stronger than the SPX. We could even come in here and say, okay, are the lows getting higher or not? And they are. Those low points there are getting a little bit higher. So out, we're like, great. Now, Amazon, I think technically, they're in the consumer discretionary. Let's go to, oops, didn't come across here. Let's get Amazon over here. Yeah, it's in the consumer discretionary sector, which we know is doing a little bit better right now, right? It's starting to show some strength. All right, so we've got a few pieces of information there. On Amazon, They do have earnings July 30th. So that's one thing to keep in mind, because that's going to be in a couple of weeks when they will have earnings. We would love to be out of the trade by then. Okay. Some people might have a rule that they will not carry it over earnings. Okay. That they would say, I'm going to get out by July 30th, sometime in the day or before. Okay. Because they announced that night. All right. We here are going to do another long call diagonal. Quite honestly, I think this is a strategy when you're newer that you don't get exposed to a whole lot. I think the credit spreads were pretty good about teaching you the credit spreads, and people are catching on to that. And this is just kind of a mix of, being able to go long something, but also have a hedge with it and be able to trade some of these stocks that are really high dollar stocks, right? If we were to just try to buy this call on its own, it's too much money for our account. We're not going to spend $1,500 on a contract when we're only going to risk 500, right? So we're going to do another vertical here. It does have $5 increments, which is nice because when you're in a smaller account, makes it a little bit easier for you to tailor to that. So here, looks like it's coming in at 255. We don't want to risk more than 500. Let's see if we can get filled a little bit cheaper here at 250 so that we could do a couple of contracts, stay within our $500. It's right at the peak of it, but right there. Let's do a first trigger sequential. Let's create an opposite order here, and let's put in another profit target. Now, again, on the profit target, you get to decide. Now, you might look at this and go, well, okay, if Amazon right now it's at 248, if it, comes along here in the next few days and gets up maybe to the top of the channel, maybe it gets up here to, 260, 262, something in that neighborhood. Is that a decent move? Yeah, that's what about another 14-point move if it were to go all the way to the edge of that channel. Now, we might not want to count on it. We might want to get out a little bit before that and not count on it absolutely touching that top edge, right? But if it makes it 90% of the way there, we might be satisfied. We're still going to put in a profit target, though. This time, we're going to do 60%, okay? So what do we have to gain in this one? We're going to risk 250 to make 250. So if we have 250 and we are willing to get out when we get 60% of that, that's going to be $1.50. We'll add $1.50 to our 250, letting us say, all right, let's exit the trade at $4. It's really, really hard to get your full max gain out of these trades, which is why a lot of people like to put in if we can get a big chunk of it, that we like to just put that in and be on our way. I think that was $4 even, right? On that one. Yeah, $4 even, and that would be a 60%. All right, 2 contracts. We're going to be happy if we get that 60%. We'll let it exit for us. Now the question is going to come up, well, should we put in a stop order here? Sometimes with spreads, people don't want to put in a stop loss, but you certainly could. Okay, we could, maybe in the next one, we'll do an OCO order and put a stop loss in one of the sites. Okay, let's go ahead. We're going to hit confirm and send this on its way. We'll see if we get filled on it. Now, our first one, our J&J trade, I am going to create a new group, and we're going to call this, I'm just going to call it Connie, so Barb knows these are the trades that we did in the class. All right, we'll move J&J there. When Amazon gets filled, we'll put it there. Now, some of you wanted to see a couple of trades from, I think it was Monday, when you had your Monday class. So let me go back and find which one it was that you wanted to see. And if I have a hard time finding it, maybe you could just type it in again for me, okay? Kevin, glad to see you're using sector rotation for stocks. It can make a big difference. It certainly can. Muriel Corey said DRAM reversal. Was DRAM one of the trades that you did? All right, if you want me to go back and look at a previous trade, go ahead and chat it into me right now. I'm having a hard time picking it out of the chats. Okay. Trader Joe says perhaps a bearish trade as well. Was that on Amazon that you were thinking you could do a bearish trade as well? You could. That would be what we'd call counter trend, which means going the opposite way of the trend. In this case, I do like the fact that we're seeing some higher highs and higher lows. And so in the short term, it's become bullish, and our 10-day moving average has been moving up here for several days. And so, yeah, it's for our purposes, we'll just stick more with bullish on that. Okay, let's see here. Apple and AMAT trade and Micron and AMD. Were both of those, Sam, trades you wanted to look at? Let's come over here. Let's see if we can find Apple. A lot of the trades here, there were some in the buy right covered call section. And there's an iron condor on Uber. Looks like it's in good shape. I'm not seeing Apple or AMAT. Just going to move that over to the Connie group. I'm not seeing either of those trades in here, either of those stock ticker symbols. So I apologize. I can't review it if I can't find it. Rob says both were vertical 21 using 21 August. Okay. Mark says, I'm asking, why are we concerned with the target price of the stock? In this case, we're noting maybe where the stock could go to. For example, it would be important if, for example, suppose we were looking at this stock, and what if the candle was like right here? We might think, it might break through, or this might act as resistance. And so sometimes traders are like, I don't want to get in right at resistance or potential resistance, right? They want to go get in when the stock actually has a little bit of room to move. And it's nice to be able to just kind of set that up for yourself, see where the possibilities might be. Or maybe there's a little move. If maybe it's just a little move, you might choose to do a different trade. You might choose to do, say, like a short vertical, where you're looking in a bullish way, where you just might be say, let's stay above a particular area. Okay, so that is an important aspect of your analysis, is where the possibilities of where the stock might be able to go to. That can be helpful to you. Now we can also do targets of option prices versus profitability. That certainly is a possibility. Let's see. All right, I think, Bill is letting us know Apple hit the target and AMAT hit a stop. Okay, according to, and actually, is this Bill Albury? Thank you for the answer. He knew what happened with those two stocks. One hit a target, one hit a stop. So no wonder they're not in here for us to find. All right, let's move on. Next up, let's do this particular one. This one, we're going to do a little analysis of this one here. CRM. It's in the information technology. Okay. Information technology has not been especially robust. It's been downward trending for a while. And I'm going to show you a pattern here and I'm going to tell you from the get-go, it's not a perfect pattern. Okay. What we might be seeing here possibly could be an inverse head and shoulders, where we have a shoulder here. Here's a head. Imagine somebody standing on their head, right? Their head's going to be hitting the floor and the shoulders are a little bit higher. And then looking like maybe it just formed the second shoulder here. Now, typically what we'll do here to determine, hey, do we have an entry or not, is we look for a break of the neckline. And I drew in the neckline here. See this dotted blue line? This is our neckline. And typically, a technical trader will wait for that neckline to be broken before entering into a bullish trade. Now, this one trend hasn't been established for very long. That 10-day moving average is starting to move up, but it's a little slow to do so, right? It's just pretty recent. But we would also measure where we think the stock could go. We're going to take the tip of the head, and I'm going to measure it up to the neckline. That gives us the height of the pattern. We're going to duplicate that drawing. I'm going to grab it, and I'm going to put it right at the breakout zone, right here. And that gives us a potential target of where we think the stock possibly could go to. In this case, up maybe about 30 points, up to around that 200 area. Okay. Does it mean it's going to do it? Heaven knows, we don't know that, right? Everything is what maybe it might be pointing to, but nothing is ever verified. Nothing until it happens. We're just going to have to wait for it to happen. Okay. So an inverted head and shoulders can have a diagonal neckline. Yes, it does not have to be straight. In fact, on your necklines, a regular head and shoulders pattern, yeah, it can be diagonal as well. We're just looking for this second shoulder here to not go lower than the head. And this one is just kind of placed nicely there. All right. Our time is winding down here. So on CRM with that inverted head and shoulders, we're going to do another long vertical. Okay. $5 white spread. That makes it nice for us as we're trying to work with our account here. We're going to do a vertical. Again, I'm starting that long leg usually at the money. Okay, so 170 right now is at the money. You don't have to start it there. If you want to be more conservative, you could go in the money. If you want to be more aggressive, you could go out of the money. This one seems to just kind of be a nice fit there with that at the money. So in this case, we would be risking $2.30 per contract. And we'd be having what to gain? $2.70. Okay, so we'd be risking less here than what we have to gain. Again, we can do 2 contracts here and not risk more than our $500. So let's take our 270. This time we're going to go 70%. Okay, we're going to try to get 70% of it. That would give us $1.89. We'll add that to our 230 and would say, happy campers are we if we get out at 419. Create our opposite order. I'm going to round that up to 420. And we'll make this one good till close on that one. Just make sure everything's looking okay, and it looks like it is. And then I'm going to put it directly in the Connie bucket. All right. So we were not able to review your trades today. We put on 3 new long verticals, and some of them are in stronger industry groups, some of them are in weaker industry groups. The one thing I didn't point out here on the relative strength line of CRM, notice how more recently it's starting to outperform the SPX, and that can help you feel more comfortable when you're looking at something that has been downtrending for a while and you're like, is it going to be strong enough to really reverse here? And that's why we wait for the break of the neckline. All right, now I hope you are following us on our Trader Talks channel on YouTube. It makes it so much easier to find our content if you do so. You can see our playlist. You can see recent videos that we've done that are small videos. You can see some of the most popular videos, ones that have lots of plays on it. This bite-sized content or some short videos that we're putting out, a couple every week. Looks like Cameron and James have done it. Well, let's see, maybe they were last week. I'm not sure. No, James and I did it last week. In any case, you can get onto those short videos. Now, again, there was a survey out there today, so I appreciate your feedback. We always appreciate the time you take to fill those out, and we read every single word. I will, Scott will, and we'll send the information on to Barb as well if there's something you want to communicate to her. We'll be happy to do that. If you're not following Scott and I on X, Connie Hill CS, Scott Thompson CS, and if this was helpful to you today, hit the thumbs up on the way out. You guys have been great. And hopefully Barb will be able to review these trades with you, and maybe they will have hit their targets. We'll see in a week or so if that is the case. All right, you guys, coming up at the top of the hour, we're going to have advanced charting techniques. Cameron May is going to lead that discussion. So go refresh your beverage and get a snack. We're going to see you back here in about 15 minutes. Thanks, everyone. Bye-bye.